I mean, the beauty of the spread betting market is the fact that you can trade across all the full range of products that are available on the platform. The shares are particularly popular in that, very similar to buying or selling the underlying products, i.e. buying and selling the underlying shares, you can trade the markets without having to put down the full amount. If you want to buy £1,000 worth of Vodafone shares, you don't need £1,000. We give you the gearing to be able to trade that equivalent size of the shares. And what we can focus on is the difference between the price that you bought it at and the price that you've gone to sell it at. So as the share price goes higher, 2p higher, you can sell the shares out, take your 2p difference without having to find the full £1,000 to buy those shares in the first place. So that's the real beauty of what the facility we're offering to the clients. So particularly on shares, we have a whole range really in the fact that, I mean, obviously very much dependent on the share price. I said Vodafone earlier, that trades at £2, but there are shares that trade at £20. There are American shares that trade up at $100. So very much geared towards the notional size of position that you want to take. We have people who will trade £1,000 a point for every 1 penny move in Vodafone, but will only trade £1 a point for every cent move in Apple. So it is really a full range of products, and you know, we're obviously catering for the retail end of the market. We're catering for people who are trading and don't have facilities to trade down onto the stock exchange, to the stock markets directly. So we tend to be at the smaller end of the scale compared to the underlying market, but we have a full range of we have clients, as I said, who will trade from the smallest to the largest size. So we quote all of the FTSE 100, all the FTSE 250 stocks. We quote, within reason, we'll quote any stock that we can hedge in the underlying market. We have a sort of a certain minimum market size. Our general rule of thumb is that it has to have a market cap of 100 million, but anything that is quoted on the stock exchange that we can hedge our position in, we're happy to quote on the platform. So if there's any stock that isn't there that you're looking for, it's always worth phoning the desk and asking them if they can add it. It could only be the fact that part of the reason it might not be there is just no one's asked for it before. It's a bit of a supply and demand situation. I picked Vodafone because obviously it's a share everyone knows, but realistically the most popular shares tend to be, the most popular shares that we see tend to be in the banking sector. So Barclays, Lloyds, RBS, always stories out about them. A lot of people who bought them at the lower values a year, 2 years ago, still holding on to their positions. And also probably the mining stocks. I think they're probably our two most popular sectors. I think it's because there is market movement. I think a lot of the clients that we have are driven as much by the underlying stock, and they understand the underlying stock. They understand Marks and Spencer's, Vodafone. They understand BP and whatever. It's the share prices that are moving. So BP, I pick as an example because it was obviously in the news a lot in the last 2 years. People have a view on it. People want to take a position in it.